morning, this is Bruno Marmo.
Good morning, this is Naiti Siriak.
Welcome to one more Money Talk show.
Today we are going to talk about a company that has been an integral part of our life. A company that is definitely more than just a supply chain company.
We will talk about Li & Fung.
So let's take a quick look at the company that was once the investor's best bet.
We are one of the largest consumer goods company in the world.
Most people around the world somehow touch or buy or wear or use something that comes from Li & Fung.
Evolved into a buying agency, a sourcing company. And then today, we're very much a supply chain manager and network orchestrator on a global basis.
We have 3 networks: the trading network, the logistics network, and the distribution network. For trading, that's our global platform for sourcing, and we source for all product categories in the consumer space, from apparel to hard lines to beauty.
We work with a network of over 15,000 suppliers, which is the largest of its kind in the world, and we can and we do customize this supply network for each of our customers' individual needs. Logistics involves the physical movement of goods from the factories across the oceans to the markets where we're selling the goods. We operate almost 100 distribution centers in the world with over 14 million square feet of warehouse space.
Our distribution network is our global capabilities for the distribution of brands,
Let's invite Atul Dugal, our industry expert, that will take us deep into the 3 business of Li & Fung.
So Bruno, if we compare the financial performance of the 3 businesses, we can clearly see that the trading business is the bread and butter for Li & Fung, as it is contributing to 65% of its core operating profit. Li & Fung is also the market leader in the trading space. With a high market share, however, a low market growth rate, this business is Li & Fung's cash cow business. Also, some of its customers are looking at backward integration. This particular thing can be worrisome for the business in the days to come. In logistics space, Li & Fung is a relatively small player, and the market growth rate is also slow, expected at about 2% over the next 2 years. Moving on to the 3rd business, the distribution business. This business will be Li & Fung's focus in the days to come. Given the rise in consumer spending, especially in Asia, the retail sector is expected to grow at more than 5% in the next 4 years. However, the $1.2 billion operating cost is something that should be troubling Li & Fung as we speak. So, will Li & Fung be able to gain significant market share in the distribution business with the help of its aggressive acquisition strategy and make this business a star in the days to come is something we'll have to wait and watch. Over to you, Bruno.
Atul, can you also shed some light on the company's most important business, the trading business, which accounts for 64% of its operating profits?
On the trading business, Nidhi, if we look at the supplier side, Li & Fung has a huge supplier network with more than 15,000 suppliers spread across different countries. Therefore, the bargaining power of the suppliers is diminished. From a buyer's perspective, as shared earlier, some of the large buyers are threatening to carry out a backward vertical integration and self-source. In my view, Li & Fung's bargaining power is medium with its buyers. Threat from new entrants is low because Li & Fung is the biggest player in the market with a massive supplier network. Li & Fung is enjoying the economy of scale and has a strong cost and quality advantage. With the aggressive acquisition strategy, Li & Fung has acquired its largest competition, reducing the threat from competition. To sum it up, Li & Fung is in a comfortable space with its trading business. Over to you, Nethi.
And today on Money Talk shows, we have 2 special guests. William Fung, chairman of Li & Fung, and Bruce Horkowitz, the CEO of the company.
Welcome to the show, Mr. Fung, Mr. Horkowitz.
Once again, thank you very much for being here. First of all, we can talk about Li & Fung without talking about China. And could you provide some insight as to where you see the low-cost manufacturing in China today and in the future? And what's the main mean for Li & Fung?
China has been so integral to global trade that you simply would not have had Christmas without China. Unfortunately, we believe that the low-cost party is over. Cost structure sentiments have changed, manufacturing costs in China are increasing, and in fact the government in China has recently passed a bill that has increased the minimum wage level, as you do know. These costs will likely be filtered through the value chain, and that's a fact of life. It's across the board. Part of our strategy to offset these changes is to acquire new businesses, which will allow us to diversify into new business arenas. Bruce, do you have anything else to add to this?
Oh, I mean, I fully agree with what you say. I mean, the only other thing that I could possibly add is that maybe China nowadays is becoming, we're seeing it's becoming much more of a purchaser of our products as opposed to just simply a supplier, as has traditionally been the case. This will of course have huge implications on the way we do business in the region, and in a way it's part and parcel of how we view the new phase of our business, which is by sourcing globally and selling globally.
So how do you protect your own profitability? Does that mean that you're moving manufacturing centers outside of China?
That's a very interesting question, Nati. Well, we are constantly looking for the best opportunities to generate maximum value for our customers. While China has traditionally been the best place to manufacture orders, we're seeing more and more opportunities in countries, quite diverse countries such as Vietnam, Cambodia, India and Bangladesh.
You mentioned acquisitions earlier. Recent financial analysts say that you may be utilizing M&A as a strategy to deliver growth, covering rather disappointing core operating profits. What would you say about that?
Bruno, there will always be those who for whatever reason try to undermine what Li & Fung has achieved. However, I can assure anyone out there that Li & Fung's acquisition strategy is extremely well thought out and targeted, and we only enter into discussions to acquire a business after conducting extensive due diligence and examining the potential synergies. We feel that conducting a well thought out acquisition strategy during times of uncertain economic conditions makes a lot of sense to us, as we find excellent deals that are available at attractive prices. Bruce, what do you think?
Oh, absolutely, William. I fully agree. Well, I would also maybe just add that we have recently issued a profit warning. We feel that this is purely as a result of sluggish consumer spending in our biggest market, the US, rather than as a consequence of any acquisitions that we've done. However, as we know, Li & Fung tries very hard to retain our competitive and sustainable advantage over the competition, and that the underlying business fundamentals of our business remain strong.
So finally, what's your outlook for Li & Fung in the short to medium term?
Well, we see the US getting incrementally better. Europe remains soft, Asia is slowing slightly, but is unlikely to have any real impact on our business given its relatively smaller market share. We have some exciting projects coming online in 2013, both in Asia and the US. We are holding about $300 million in cash for potential new acquisitions, fully expecting our ongoing operating cash flow to be sufficient to cover operating needs, dividends, etc. Bottom line is, we remain committed to achieving our 3-year plan target.
It seems that there are exciting times ahead for Li & Fung. It was great having you on the show. Thank you, Mr. Fung. Mr. Rockowitz?
Thank you.
It was a pleasure.
And after the break, we come with Christian Tudowski, the analyst from BIG Bank, directly from Hong Kong. Nathan, let's switch over to Christian Tudowski, retail analyst at BIG Bank in Hong Kong. Christian, how are you?
Good, Bruno, good, thank you.
Christian, continuing with our newsroom discussion on Li & Fung, if we look at the stock market, Li & Fung has been the biggest loser in the market, in the Hang Seng Index over the past year. Is this just the tip of the iceberg?
Yeah, well, Nathan, if we consider that demand in Western economies is kind of declining, Li & Fung is getting more and more dependent on M&A strategy to maintain growth. Consider that 1/3 of the increase in sales since 2007 has been due to acquisitions. and Li & Fung's core top line has grown only 3% a year, reflecting a very weak performance of the underlying business. Additionally, with management's recent warning of a 40% drop in operating after meeting Allenlust just weeks before, the market is really questioning management's guidance credibility and the company's ability to meet its 3-year earnings target of 1.5 billion by 2013.
Christian, many in the market are also questioning Li & Fung's growth strategy through acquisitions. Why is that?
Absolutely, exactly. The smaller companies it has bought have not met their targets, raising doubts on the synergies of these acquisitions. And actually, another big issue is whether Li & Fung can actually afford to shop around so freely. But the company previously has enjoyed easy access to funds due to its high P/E ratio and good credit rating. Recent rating downgrades and weak stock performance now makes it significantly harder to find funding. Additionally, Li & Fung's cash conversion is just half of its competitors, making a decline in sales a huge impact on liquidity. Plus, Li & Fung still feels very comfortable paying out 80% of its earnings as dividends. So this all makes it very reliant on funding from equity or debt markets.
So, Christian, what are the other issues?
Another issue is that the group's operating profits is only about 4% of sales, less than half the rate of its competitors, and only a quarter if you strip out the effect of depreciation of its competitors. Yet, relatively weak though it is, the company's performance has improved significantly, boosting gross profit margins by 2/3 and operating margins by 1/3 in the past decade, suggesting that there's indeed benefits to size. In this context, growing via acquisition makes more sense, as does Li & Fung pursuit of a higher margin design business and brand operation, such as Exim Design and Hampshire Design. Additionally, tapping into substantial opportunities for cross-selling between its 3 interconnected segments will help Li & Fung to get a better operating profit.
So Christian, how does this all translate into your take on the stock and its outlook?
What's your recommendation?
Well guys, ultimately, just having such a vast network does not deserve a premium anything like the company currently carries around in such a low margin, low cash generating global game. So my clear advice to all the investors, sell. You heard it first from BIG Bank. So back to you, Bruno, Nathy.
So Bruno, having covered the financial perspective, let's now again reach out to Atul and get his take on Li & Fung's future strategy.
Nathy, in my mind, with the gradually improving macro environment, we can see an increase in the consumer confidence in spending. There are 2 things that Li & Fung will focus on in the days to come. Firstly, Li & Fung will continue with its acquisition strategy, especially for its distribution business. However, Li & Fung will have to take a hard look at its operating costs for the distribution business. With a growing distribution business, Li & Fung will be able to safeguard itself against the backward integrating customers. The trading business that has been Li & Fung's core competence will give its distribution the edge over its competition. Secondly, Li & Fung will be able to increase its Asia focus because the demand in the Western countries has been gradually declining. I mean, European business has almost bottomed out. So I can tell you one thing for sure, Nathy. In the coming days, how Li & Fung steers its distribution business is something we all should watch out for. This is Atul Dugal signing off for Money Talk Asia.
Thank you everybody for being here with us in one more Money Talk show. This was Bruno Marmo.
This was Nathy Syriac.
See you.